Hello, welcome to our new video for today, and let's see for second adjustments on our trade receivables adjustments. So in this topic, we will be facing lots and lots of issues with customers. From the starting off with selling things, you have to persuade customers, you have to influence customers to buy your product, and after you have sold your products to them, either at the spot you receive money, which is a cash sales, or we could be also selling to our customers on the credit terms. Yeah. So credit means what? We sell to them the goods first. Money, when we'll get. Later, only we'll get the money from them. So that will be credit transactions, the credit sales. Now, the issue here is what? The biggest issue is getting the money from them. Every month, we will send statement of accounts to our customers to remind them the balance of the debts owing to us. And the thing is, not all customers or not all businesses would be very flourished at times. Sometimes there will be huge challenge that awaits. Sometimes customers may not be able to have that much of money. Why? The issue that we'll be facing is financial distress. Let's not use the tick. Let's use this instead. Customer, no enough money. I don't have money lah. I don't enough money. I cannot pay you. Can I pay next month? Yeah, that's the kinds of things that will happen. Other than that, customer may be what? Maybe MIA. Oh dear, that's the headache part. You are missing in action, disappearance. The so-called MIA, missing in action. You send statement of accounts, or you WhatsApp, you text your customers. Your customers never even reply you, or even they never even read your message. Stress. So they disappear. And there could be chances where customers have bankruptcy. Yeah, bankrupt. You never know. Suddenly you saw your customer's name pop up on the Edge newspaper or some normal daily newspapers such as the NST, the Sun. You see them like, hey, isn't this my customer? Why suddenly bankrupt one? Okay, so that's a big issue. And last one, well, RIP, customer. The one and only, that one of my customers passed away. And so its business closed. His or her business closed, and therefore nobody even go and continue the business because it's a sole proprietor. No one else takes over. So rest in peace. So once these things happen, you may as well make an adjustment for something we call it as irrecoverable debts. Irrecoverable debts, meaning debts that cannot be recovered back. It's like totally gone, 100% gone. So initially, let's say for only this one customer, let's say it's the only one customer, yeah, we make a credit sale of 20,000. Then later on, we saw this fella bankrupt. So this 20,000 definitely could not pay back to us. So later on, we will start off against our expenses, heading irrecoverable debt, 20,000, and therefore this particular credit sales with this customer gone bad, zero. Sometimes the irrecoverable debt, they call it as bad debts, the debt that has gone bad, that bad, B-A-D, yeah. But the current terms, the latest terms that we're going to use to talk about bad debts is called irrecoverable debt. Okay, so this is the matching process over here. Okay, under the expense in our income statement, we knock off a 20,000 from the entire revenue. Okay, so here's the matching part. So how to do this? Okay, because our customers has gone bad, they bankrupt, they disappear, or RIP, or very, very terrible financial distress. So therefore, we will throw away that fella from our list. That's the feeling here. Irrecoverable debt. That particular customer, I don't want you already. So what we're going to do is, in terms of accounting equation wise, okay, we're going to deduct our trade receivables. And hence, it will be an expense. Once an expenses happens, means we will add our expenses. Okay, trade receivables will be deducted at where? You just remember, trade receivables will be a current asset in our SOFP. It will be deducted from there. Expenses will be in our income statement, therefore it will be shown in our income statement. Remember, once we make an adjustment, we'll be touching both sides. One, the income statement portion. Another part is our SOFP portion. Just like if we debit something, there will be a credit something. Always remember that. There will be two parts, the income statement and also SOFP. Okay, so since our asset, okay, so I'm talking about a little bit of our T account, our main thing here. Asset is here, liability is over here, expenses over here, income over here. Okay, debit side and credit side. So once a trade receivables is being deducted, we will therefore, okay, come out, we will go out, okay, will be deducted. So once it's deducted, it will go to the other side. So we will say we credit our trade receivables and we will debit our expenses. In what particular expenses we are talking about here? Trade, what is this? Irrecoverable debts. So we will debit our irrecoverable debts. Okay, so that's all. That's the double entry. Okay, so our trade receivables will be on the net trade receivables amount. So this is irrecoverable debt, 100% gone case. Now, what if there's a time our customers make a fortune? Isn't that good? So once our customer had made a fortune suddenly, okay, from a financial distress, suddenly they are okay already. So that will mean what? That will be an irrecoverable debts recovered. Okay, nice. It's a good news over here, guys. Just now over here is a bad news. So once it's a bad news, that will be an expense. If it is a good news, that will be income. Yeah. So what's an irrecoverable debt? Recovered. Basically, it's the opposite of all this issue. Previously, financial distress. Now, financial eustress. Okay, a very steady financial position. Disappeared. Why? No money. So now suddenly appeared. From bankrupt, become raised up again as someone new. Okay, from bankruptcy, become revived back its business. RIP, pass away. Don't you tell me that that person revived back or come back as a ghost and pay you money. No. So if the owner pass away, maybe highly chances lah. Okay, if he has a next of kin, they will take over the business and the business is going to be continued. Okay, and once they make fortune, they are able to pay you back. So once an irrecoverable debt recovered, meaning to say customer paid you money. So simple means you will receive money. And when that happens, it means your bank or cash in the cash book will be debited because you receive money. And hence, this particular income increases. And so double entry will be very simple because you receive cash or bank or in check. Okay, so you debit your bank or your cash account. And what you credit, what is it about? Irrecoverable debts. Recovered. Congratulations, you got back your money from your customer who once have gone missing. Now the person suddenly come back and you are given the money. Okay? Now, the third adjustment for our receivables will be this thing known as provision. Provision of doubtful debts. Okay, what's this? This is a situation where we are feeling doubtful. The name has already suggested doubtful. Provision means you provide a future vision for something that you are being in doubt. You're wondering things. What are you wondering for? You're wondering for your debts. Why do I need to wonder for my debts? Why? I don't understand why I need to be very paranoid. Well, if you also remember, there has one time in the past during the 2020s, okay, we have MCO, correct? Let's say, okay, a very bad market phenomenon. Okay, a very huge outbreak of COVID-19 back then. So I'm sure everybody might be you'll be just staying at home and you're watching the streets out there, very silent. The streets out there, all the shops have this banner hanging there saying for sale, for rent, for sale. Everything is like bankrupt. A lot of shops are not able to do business and therefore they just gone mouthless and they're about to sell it off. So let's say your industry that you are at, let's say it's this normal grocery shop or God knows what you are selling. You're selling something, but your friends of the same industry are facing this kind of phenomena during that, outbreak. So you'll be wondering, hey, I have trade receivables owing me $100,000. Trade receivables. And I wonder, with this bad market phenomena, and some of my customers pattern, I know them. I know how their attitude like. They are like, later, I pay. Now I'm very stressed. My company business not good. So you feel one kind. You feel like, I don't know. I don't know whether I can get back all these 100,000 with these current situations and the past experience that I have with my customer. So maybe will I be? Is it okay? Well, I just make a mental preparation. I make a mental preparation that there will be 4% chances that of this 100,000, meaning 100,000 out of this, that would be 4,000. Okay, there will be a chance that I will not be able to get this back. So in my SOFP, okay, for the next 1 year, okay, SOFP as at 31st December. Let's say this is 2020 back then. Let's take this date for 2020. Okay, the next coming 1 year's time, under my current asset here, my trade receivables, by right, I should be expecting $100,000 to be received in the coming next 1 year, meaning 1st of January 2021 up to 31st December 2021's time. Within that 1 year, I'll be able to get these 100,000 back. But since things will not be that perfect as what I am expecting, so I provide a provision for doubtful debts, okay, of 4,000, where I could not take back this much. So I only will be able to predict a so-called, okay, not 96,000. I will be able to predict a practical amount of 96,000 that I will be able to receive this amount, a practical amount, not the perfect one. Okay, why they do this? Because they are abiding, as accountants, we are abiding to the rule of prudence, which you'll be learning next time in the university. Meaning to say, we do not want to overstate assets and income, as well as we do not want to understate our liability and expenses. It's like a typical Asian, guys. It's like we are very they so-called the kiasu kiasi. We want people to see us like very not that good lah. Although we are good but we say to people, yeah, not that good you're much more better than me. This is the feeling of prudence. And if you still remember, if you all have watched Spider-Man No Way Home back then, the three of them at the top of the rooftop of the building of their college, I think. MJ say to Spider-Man say that we should expect for disappointments, so that will not be that very sad once the disappointment happens. We should get ready for disappointment. And this is exactly what it feel like in provision for doubtful debts. So this is the understanding and the feeling about provision of doubtful debts. So accounting wise, how you should calculate them? Okay, the first one has been done for you. So you calculate the provision. There's 2 steps here. Step 1, in our SOFP, you will calculate the provision for doubtful debts for this year. Like for here example, let's say we have 100,000. Okay. Now there will be chances question can combine with other things such as irrecoverable debts as well. Okay. So your irrecoverable debt, let's say you found an irrecoverable debt last minute now. Okay. Let's say I have 1,000. Let's see. Okay, 1,000 then. Now because I want to avoid decimal points also. Okay. 1,000 irrecoverable debts. And therefore, I will left with 9,900. So this is my net trade receivables. Okay, this is the first step. And at the same time, I will multiply with, let's say, 4,000 pula, 4%. So 9,900 times 4%. Okay, 99,000 multiplied by 4%. That will be 3,960 of provision for doubtful debts for this year. These will be recorded straight away in your SOFP over here. Okay, so there's 100,000. 100K minus 1K, you'll be getting left with 99,000. And minusing off with this 3,960. You'll be expecting in future 95040 to be received for the next coming 1 year after 31st December. Step 2, you need to compare this provision amount with last year. This amount that you saw in your trial balance will be the last year's provision for doubtful debts, in which it is not yet updated. The ones that you updated is 3,960. So you have to compare. Now, 2 situations can happen. Number 1, if let's say last year's figure was 3,000, okay, so therefore you see a balance, not a balance, a difference of 3960 and 3000. You just find the balance, yeah? You just find the balance of differences. That will be 960. If it is a 960, you'll be looking at it like this. This year's amount, 3960, is bigger than last year's $3,000 of provision by 960. So meaning it has already increased. So once it increased, means the things that you are doubtful for increases. So meaning you are even much more stressor, correct? So once it's something stressful, you are sad, means it will mean an expense. So that will mean a increase in provision of doubtful debts in your expenses, and you take the amount 960. If situation number 2, you're presented with last year's amount in your trial balance was 5,000 and this year's is 3960, there is a differences of how much? So there's a differences of $1,040. So you just ask yourself, this year's amount 3960 is lesser than last year's $5,000 by how many? 1040. So that means there's a reduction already, right, compared to last year. So if it's a reduction, meaning our doubt has been reduced, in which it is a good thing, right? It's a good news. So therefore, a good news will reflect on income. There will be reduction in provision for doubtful debts of 1040. If you never ever provide for provision, 3960 will be appear both in your SOFP and your expenses as a provision for doubtful debts created. 3960. Third situation, you never create anything. So under expenses, you'll be putting them as, okay, provision for doubtful debts. You want to put created or not, you never put the word created, also can. 3960. There you go. Okay. So, you see, provision. Okay, what will be the double entry? Okay, what to debit, what to credit. If let's say you just created this provision, we will be an expense. An expense is a debit balance, do you remember? Over here, okay? Maybe I bring them down here. I bring our friend down here as a guide. So once we create a new provision, we will debit our income statement and credit the provision for doubtful debts. So provision for doubtful debts of 3960, 3960. If it is a incremental in provision for doubtful debts, therefore the double entry also the same, but it will be 960. Okay, meaning in our income statement under the expenses there we write increase in provision for doubtful debts. If let's say it's a reduction, then it will be the other way around. We will debit our provision for doubtful debts and we credit income statement with these 1040 and 1040. Okay, we credit the income statement under the income portion, the income heading, and we write reduction in provision for doubtful debts. Okay, so that's all for the basic adjustments for our customers issue, our trade issue. So till then, see you again in our next adjustment video, and goodbye.